Hello everyone, and it's certainly an exciting day in markets. We're seeing gold continue to move higher, and if you managed to see my show yesterday, or we will make that show available with time, it could have been very timely because I was talking about potential risk for markets and that it is definitely a bubble, and you've heard that kind of thing from me before. But there's something very odd happening with the price action for equities at the moment. It almost looks like a silent top sort of process is happening. In the Australian market, we're seeing constant selling pressure, but whenever we get down to the kind of levels we're at this morning in Australia, a very good sort of spike reaction to the upside. What that tells me is that there is a super large individual fund rather than it being a mass of multiple different traders. There's a single large player who's buying an enormous amount of Australian stock across the board, or maybe in one or two major companies, and they're doing so at about where you can see those spike lows in the hourly over the last week or so. There's been 4 or 5 of them. They're very obvious. That is a big buy order, and whenever the market gets near the levels of the buy order, huge volume is done, hence the big reaction to the upside. Watch those spike lows. For instance, the low we saw today in Australia, even if that were to be breached later in the day, let alone in coming days, that would suggest perhaps that the Australian market is due for a very sharp acceleration to the downside. On the same note, the US stock market, it's as finely tuned as this. I'm not often able to say this to you, but even if we broke the lows of the last 12 hours, the US market could also be in trouble. So if you like, there's that buyer in the Australian market fighting against much more broad-based selling. I think broad-based selling is becoming increasingly common in the Australian market. A lot of people like the idea of buying Japan today, and someone asked me that question on the show yesterday on AusBiz. And I think that's a really interesting idea, and it's not one I'd thought of before actually, so thank you for that question yesterday on AusBiz. But I've heard it again today from other traders that perhaps buying Japan is not a bad idea, and I guess the background to that would be there's been so much bad news. Japan has struggled so much. It's probably one of the markets that still represents value around the world. But I do not think the US market represents value. I do think gold represents value, and the Australian dollar is still under pressure. The euro right now, actually very interesting, because yesterday I had the sharp down move. The euro right now is looking like it wants to create a low and move higher. If you have a look at that on the half hourly or the hourly chart, it's really made a spike rejection and 2 little hesitations either side, and wants to break higher, and that is the trade that a lot of the day traders are making at the moment, to look for that break higher. I think what's happening though is there is real selling, so a lot of day traders are running into a wall of selling, and the day traders will have to reverse out of their positions, so I still think the euro is in trouble. In terms of fundamentals, we saw some mixed data in the US last night, but there's no doubt that mortgage applications, permits, housing permits, their data bouncing around, but overall it is very weak data. Still very seriously concerned about, in the way that equity prices detached from the real economy, now housing prices in the US have detached from the real housing industry and construction industry, and that is a concern. And that's why I've been highlighting the point that we could see a simultaneous decline in property and stocks in the US going into 2022. I think 2022 will be a risk off year, not necessarily a risk on year. It's definitely a massive risk on year if you're among the soon to be, yet to be wealthy. If you're among the very wealthy, if you're very nimble, just be nimble, just be quick, just be nimble, then you've got a chance there too to increase your relative net worth. If you're among the super wealthy, I'm not sure you should be, I think you should be taking some cards off the table here, some checkers off the table, and pocketing, because you're already on the podium, as I like to say this week several times. Economic data overall very mixed to bearish. We did see a heartbeat for the US economy. It's not a big heartbeat. I still think we're going to see sub-trend economic growth for the US, but on the day, I would be very much watching the low of today so far seen in the Australian market. It should hold up for the rest of the day and rally for the next 24 hours. That's what it should do. That's what it's done previously. But I have a funny sneaking suspicion we won't get that. That will actually see the market start to fall. If we get the Australian stock market falling and the Aussie dollar falling at the moment, that will mean that among the global investment community, there is a building sell Australia theme. And I think that's something to be very much on our toes for and to keep a close eye out for. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities. It's great having you with us, and we hope you're having a great day. Thank you.